Narrator, are you holding shares in Netweb Tech, Lupin, or Tata Power right now? Or maybe you're wondering, is this the right moment to buy, hold, or sell? With markets swinging like a pendulum and precious metals dancing to their own unpredictable tune, it's easy to feel overwhelmed. But don't worry, today, we're cutting through the noise with expert, data-driven insights to help you navigate this volatility confidently. No fluff, no hype, just clear, actionable analysis on live stock market trends, gold and silver price movements, and deep dives into those key stocks you care about. Ready? Let's jump in. Narrator, welcome back. In this video, we're unpacking a live update on the stock market's pulse, the latest on gold and silver prices, and a thorough look at Netweb Tech, Lupin, and Tata Power shares. Why these three? Because they're at the intersection of some of the most dynamic sectors right now: tech infrastructure, pharma innovation, and renewable energy. Understanding these stocks means more than just looking at price charts. We'll explore the fundamentals, the macroeconomic factors at play, and how global trends are shaping their future. Whether you're a beginner just getting started or a seasoned investor fine-tuning your strategy, you'll walk away with practical insights and smart risk management tips tailored for today's market conditions. So, buckle up. Narrator, first, let's set the stage with a snapshot of today's stock market environment. The Sensex is hovering around 61,200 points, while the Nifty sits near 18,200, both showing sideways movement with bouts of volatility throughout the day. Sector-wise, tech stocks have been mixed, some gains offset by profit booking. Pharma stocks like Lupin are holding steady but with cautious investor sentiment. Energy stocks, including Tata Power, are gaining momentum, boosted by recent government announcements on clean energy policies. What's driving all this? A mix of global cues and domestic factors. Inflation data from the US came in slightly higher than expected, fueling concerns over interest rate trajectories. Meanwhile, the Reserve Bank of India's stance remains watchful but accommodative, creating a sensitive backdrop. Add to this the geopolitical tensions in Eastern Europe and the Middle East, and you've got a cocktail that keeps traders on their toes. Tech stocks face headwinds from supply chain constraints and higher input costs, but also tailwinds from increasing digital infrastructure demand. Pharma's outlook is shaped by regulatory scrutiny and innovation pipelines, while energy stocks respond to rising commodity prices and policy support for renewables. This delicate balance sets the tone as we dive into specifics. Narrator, shifting gears to precious metals, gold and silver have been the traditional safe havens, but their recent behavior tells an interesting story. Gold is trading near $1,975 per ounce, slightly off its recent highs but still holding strong. Silver sits around $24 per ounce, showing more volatility. Why the move? Inflation concerns are a major factor. Investors turn to gold as a hedge against rising prices, especially when currency values fluctuate. The U.S. dollar's relative weakness against the rupee has also made gold prices more attractive domestically. On the flip side, geopolitical tensions continue to lend support to safe haven demand, even as global economic data hints at a slowdown. Silver, with its industrial applications, feels the pulse of manufacturing activity, so when global growth wavers, silver tends to dip more sharply than gold. Interestingly, we've seen a mild divergence between the two, suggesting investors are weighing inflation protection against growth concerns. Experts differ on whether now is a time to buy or hold. Some argue gold's current consolidation is a pause before another leg up, while others caution that potential interest rate hikes could dampen momentum. Bottom line, diversification with precious metals remains wise, but timing and allocation should align with your broader portfolio strategy. Narrator, now, let's zoom in on Netweb Tech. For those who might not be familiar, Netweb Tech is a key player in technology infrastructure and data center services, a sector that's gaining steam as India accelerates its digital transformation. In the latest quarter, Netweb reported a 15% year-on-year revenue growth, driven by increased demand for cloud hosting and data management services. Their client base expanded to include several mid-sized enterprises, complementing their existing portfolio of large corporations. Recent strategic partnerships with global cloud providers are noteworthy, positioning Netweb as a critical infrastructure partner. However, challenges remain. Competition is intense, and margins face pressure from rising bandwidth and hardware costs. Technically, the stock is trading near its 50-day moving average, with relative strength index RSI hovering around 55, indicating neither overbought nor oversold conditions. Analysts generally rate it as a hold with a positive long-term outlook. So, when to buy or sell? If you're bullish on India's digital economy growth and comfortable with moderate risk, accumulating on any dips could prove rewarding. But if you're more conservative, waiting for clearer signs of margin expansion might be prudent before committing heavily. Narrator, next up, Lupin, a heavyweight in India's pharmaceutical space, known for generics, specialty medicines, and a broad global footprint. In the most recent earnings release, Lupin showed revenue growth of about 6%, with some pressure on margins due to increased raw material costs and currency fluctuations. Regulatory hurdles, especially in the U.S. FDA domain, continue to impact certain product lines, posing short-term risks. On the upside, the company is actively launching new products in emerging markets, and its focus on specialty segments like dermatology and cardiology provides avenues for growth. Additionally, Lupin's investment in R&D signals a commitment to innovation, a critical factor in maintaining competitive advantage. From a valuation standpoint, Lupin trades at a price-to-earnings ratio slightly below industry peers, suggesting potential undervaluation. But this comes with the caveat of regulatory risks and global supply chain disruptions. Strategically, if you have a higher risk tolerance and a longer investment horizon, Lupin offers an intriguing mix of challenges and opportunities. Those more risk-averse might prefer to monitor regulatory developments closely before increasing exposure. Narrator, finally, Tata Power, a titan in India's energy sector, increasingly pivoting towards renewable energy sources like solar, wind, and hydroelectric power. The company's recent quarterly results were promising, showing a 12% increase in revenue, fueled by growth in its renewable portfolio and improved operational efficiencies. Government initiatives promoting green energy adoption, subsidies, and ambitious carbon reduction targets have bolstered investor confidence. However, commodity price volatility, especially coal and metals used in infrastructure, presents risks. Plus, execution challenges and scaling up renewable projects can impact timelines and costs. Looking ahead, Tata Power's strategic focus on clean energy positions it well to capitalize on India's energy transition. Analysts highlight a buy rating, citing strong order books and growing renewable capacity. Investment-wise, the stock suits those who believe in the long-term energy shift and are comfortable with sector-specific risks. Diversification within your energy holdings and periodic review of policy changes is key. Narrator, to wrap up, here are the key takeaways. The stock market remains volatile, driven by a complex mix of global inflation, central bank policies, and geopolitical factors. Tech, pharma, and energy sectors each have unique catalysts and risks to watch. Gold and silver continue to play a vital role in portfolio diversification, offering hedges against inflation and uncertainty, though timing and allocation require careful consideration. Netweb Tech shows solid growth potential aligned with India's digital push, but keep an eye on margin pressures. Lupin Pharma offers a blend of opportunity and caution, innovation-driven growth balanced by regulatory and supply chain challenges. Tata Power stands out as a renewable energy leader poised to benefit from policy tailwinds, though commodity and execution risks remain. Staying informed with live market updates and adapting your investment strategy to evolving conditions is more important than ever. Narrator, if you found this video helpful, don't forget to hit that subscribe button for regular, expert-led updates on stock markets and commodity trends. Give us a thumbs up to support more quality content like this. And I want to hear from you. Which stock are you watching closely right now? Are you bullish on Netweb Tech, cautious about Lupin, or excited about Tata Power's clean energy journey? Drop your thoughts and questions in the comments below. Let's get the conversation going. Also, hit the notification bell so you never miss our deep dives and live market breakdowns. Thanks for watching, and see you in the next video.